Let's see what the mainstream news has in store for us today.
Stocks are tracking for yet another record close. Here with her best ideas on positioning at these lofty levels is SoFi's head of investment strategy, Liz Thomas. Nice to see you.
Nice to see you too.
Best positioning right now in the market. Again, we're going to have record close, we think, is where?
Well, I've been talking about for a while investors needing to diversify their growth and momentum exposure. Obviously, we've had long periods of time where growth stocks, momentum stocks have led the market higher, but now embarking on what is set to be a reignition of a Fed cutting cycle, I think this broadening out trade really does have legs, and I think it's got legs through the end of the year if we're going to get more cuts. So when we're looking into the Fed next week, first of all, the devil is always in the details, and you want to be looking at that summary of economic projections for what they think is going to happen by the end of the year. But this broadening out trade should be an opportunity in small caps, although I would use the equal weighted S&P for that exposure, because actually during cycles where the Fed cuts because they can, large caps still tend to perform really strongly. So you don't want to walk away from that exposure. And then sectors like healthcare, financials, and even energy at these levels.
So you don't care necessarily about 25 or 50 next week. It's the start of the trend of multiple rate cuts over time that lets that positioning work.
It's right. It's the message that they're starting on this normalizing rates process again. So I don't think we're getting 50 next week. I think the market is ahead of itself by thinking that. And actually, we lowered the pricing of that as the day went on today. It would be really difficult to explain 50. I think we get 25. And I think we continue to get increments of 25 unless the data starts to really fall apart.
25 basis points. We need 50 basis points, okay? Just like Powell was behind the curve before with raising rates during inflation, he's behind the curve now with cutting. The jobs numbers are showing it. 818,000 jobs missing, 2.1 million over the last 2 years. He should have been cutting a year ago. Papa Trump knew it, and now Powell knows it too. Fine. She's talking about how we're starting the cutting cycle. This, my folks, is what we've been waiting for. We want fiscal and monetary policy to be so aligned that they're looking for number to go up. You hear everything she just said? Everything she just said is all-time highs will continue until morale improves. Starting the rate cut cycle means that there's a Fed put on the market and high beta, high risk assets. We're at the beginning of this. We're at the beginning of the cutting cycle. So you take your money from where it is, you take it out from your mattress, you sell what you need to sell, and you put it on financial advice within the market in high risk, do your own research, and you watch it soar. This is what I've been waiting for, Peter. This is what I've been waiting for. Now, good news? Well, good news. It's good news. It's good news if you're pro the transfer of wealth from those who have little to those who have a lot.
Okay.
That's what they mean by normalizing rates. Who wants interest rates to go lower? Only the poor people want higher rates. Richer people want lower rates. Normalizing rates, good for rich people. Bull market resumed.
Funding secured.
Funding secured.
But what we're obviously all looking at right now is the labor market. Yes, there's weakness in the labor market, but absent some sort of crack in corporate margins, corporate earnings, there's really no reason that some big layoff cycle should start to take place. So
yes, there's weakness within the labor market, but absent people with money, those who have, feeling the pain, what do we have to worry about than these regular Joe Blow people? Guys, you got to be exposed to the markets. Do you hear? She's nobody. She's just a regular person. She's just a person whose job it is to talk about this stuff. And she even she knows. You're exposed to the markets, you're good. You're not exposed to the markets, good luck. You're a footnote.
So it's okay that the labor market is cooling, and actually an unemployment rate at 4.3% is still below where the Fed thinks it's going to be at the end of the year. They had it pegged at 4.5%. So there's room for the labor market to cool further before.
There's room for the labor market to cool. Peter, translate that for me.
There's people are going to lose their jobs, and they're going to let that happen.
There's room for people to lose their jobs. Sure, the unemployment rate ticked up from 4.2 to 4.3%, but they were expecting 4.5, so we're not even close to there.
Before I think they get uncomfortable.
If Chair Powell sounds a little bit dour about the economy, certainly the labor market, but still leads us to believe that he's cutting, does that still work for stocks, or do we sell the cut thinking like, well, we may have some economic period of uncertainty, if not more weakness, that we're going to have to contend with?
There's always a risk that in his messaging, he talks about some sort of weakness and the market thinks, uh-oh, they know something that we don't know. And I also think that if the market continues to hope for 50 basis points, there could be a disappointing reaction day of the Fed meeting, maybe the next day. But in reality, we don't want them to start cutting because they're forced to cut. We don't want them to send a message that they're cutting because there's weakness that they're concerned about. I don't think that that's what we're going to get from him next week. I think we're going to get a message that's more along the lines of it's appropriate to loosen policy a little bit here because of some of the data that's come in our dual mandate.
Did you hear that? God, I love finance people. The way they talk, it's like they're recently human or recently not human. So he has a very reasonable question. Hey, if people are like losing their jobs a lot and like all that sort of thing, and there's problems within the economy, maybe cutting rates sends like the wrong signal. Maybe it sends a signal that, hey, we know something that you don't know, that things are so bad that we have to really cut, and maybe we have to cut more. Is that a concern? And she goes, look, the Fed's not going to want to introduce any uncertainty within the markets, right? So chances are they're not going to say anything like that. That she's not saying that can't be the case. Mm-hmm. She's saying that the market is priced in potentially a chance of a 50 basis point cut. And her concern is that if the Fed isn't pushing the narrative of the 50 basis point cut because there's more problems within the markets, that what they'll do is not cut, and then the market will sell off because it expected 50 basis points and it only got 25. That the uncertainty is that the market expects worse within the economy, but the Fed isn't admitting it. See the game we're playing over here? And so she says here, the Fed shouldn't be or isn't forced to cut to match markets. Excuse me? Did you just get off the boat? The Fed does what the markets price in, because when they don't, the markets freaking lose it. All right? So the more that the market prices in a 50 basis point cut, the more likely they are to do it. And they could probably say 50 basis point just to be cautious. They could say it that way. Just to be cautious, we're going to cut 50 basis point. Just have a little head start. We don't want to be behind the curve last time. We're going to have to cut 50 basis point. And you know what the market's going to do then, Peter? Do you know what the markets would do if the Fed cuts 50 basis points and says, hey, we just want to play it safe. We want to be ahead of the curve. What do you think happens to asset prices?
Goes up.
To the moon, baby! To the moon! They'll be like, the Fed's here for us. They're going to give us sweet, sweet liquidity injection whenever we need it. Ooh, get that bubble out. Sometimes the needle is just as good as the high.
Oh, my God.
That's what it's going to be, buddy. Wait, 17th comes around. The Fed says 50 basis point and goes, don't worry about it. Everything's fine, 50 basis point. You better hope you have enough crypto and NASDAQ, buddy, because it's going to be fireworks.
I still think that they want to wait for the inflation data for more in fall to really make a decision on what to message.
I got you. Sorry for stepping on your toes.
That's okay.
Last question. You suggest to buy software on dips. There's a point of contention in that. Can you be more specific on that? And
Yeah. Buy the dip. Bull market, buy the dip. Buy all the dips. Buy them hard. Buy them fast. Leverage up.